Welcome back. So in the last video I showed you how to place the initial stop loss once you get your trade signal and your entry signal, and I already touched a little bit on the topic of when to cut a trade and also what to look for when the trade goes against you. But in this video I want to spend a few more minutes to explore this topic in specific. So let's take a look at the examples that we looked at previously. So if you remember, we said that here was this entry candle. You can see we were coming from this short-term downtrend. We put in this head and shoulders here. This was the second entry that we looked at. So actually let's go here to the first one, which was the initial candle that broke the 20 SMA, and we said that the stop loss goes underneath the candle that broke the 20 SMA, which was this one in this case, the green one with a long wick. We also said we use a little bit of padding or just a little bit of extra space, and you can see what happens after you enter the trade. Price does not follow through on your trade idea. So the trade idea was that we were in the downtrend, we saw this reversal, price was not being able to push much lower. Here you can see the lower low was just barely lower, and we expected to see an upside reversal, but what happens is that the next candle made a retest of the moving average. We tried to move lower with this long wick. Price pushed back up here immediately. We closed right on the 20 SMA, and at that point you could have stayed in the trade. There was nothing wrong with it. But then afterwards you see a long candle that is violating your trade idea. At this point it is very clear that your initial idea is not going to play out right away. So there's nothing wrong with cutting your trade, or at least getting out of the major part of your position, because this is obviously going against your overall trade idea. So as a rule of thumb, what I always suggest is that if you see that price is going against your moving average and it is breaking back below the moving average, like in this case, then this is not a good signal and you should probably get out of the trade or at least close it partially. The next candle probably would have gotten your stop loss here with this wick. Although price shot back up here, this is not always going to happen, so it is better to be safe than sorry. And if you don't get such a reversal, you will be very happy that you are out of your trade here and not get the full loss. So the first rule is that once price goes back against the moving average, it closes back on the other side, then it is usually a good idea to cut your trade. Because if the trade resumes into the original direction as it did here in this case, you can always get back into the trade. You can see here price shot back up. At this point we had this head and shoulders also confirmed. So if you cut your loss here a little bit early ahead of your stop loss, you can be proud of yourself. You showed yourself that you respect your rules, you don't try to push your luck, and then you can get back in. Here you minimized the loss, although it was almost a full loss, but nevertheless, if you can reduce your initial loss a little bit, that is good for your overall expectancy. And then if you get your re-entry opportunity, you have a much better chance of then making up for the loss and then adding some profits on top of that. Let's look at the next example here on the right. You can see here we talked about this as well. The first entry probably here after we closed right on the moving average after this strong upside. Then the initial stop loss, as we said, goes below this candle again, and you can see here what happens is price is rounding off. Here we are even gapping below the moving average. You can see this candle closed above it, then we opened this candle here. So at this point this is a tough call to make. We have not closed below the moving average at this point, we have just opened below it, so this can go either way. There's nothing wrong with cutting your trade. You can see that the entry level here, let me mark that correctly, on the open of this, on the close of this candle, you could have realized probably something like not even half a loss. So if you get out here once you see price is going against you, then there's nothing wrong with managing a loss that way. You don't have to sit through the loss, so you can for sure get out here without any problems. Over the long term this will help you to reduce your risk a little bit if you are quick on your stops. And again, as you can see, you would have gotten a very nice re-entry opportunity once this retest of the 20 SMA has been confirmed. You can see a very clear pattern. We broke above the moving average, we came back into it. Here then we are finding support and after this candle closes, it is confirmed that price is actually making a successful retest. So another very nice example how you could have managed the trade once it goes against you. If you see that your trade idea is invalidated, you get a good chance to get out of such a trade for a small loss. You should usually take that opportunity and then wait for the re-entry opportunity. Let's look at this example one more time. So we were in this downtrend, we had this reversal here to the upside, we broke the moving average with this candle here, which was the entry candle here. So let me mark that. So it's the close of this candle. You can see here the initial stop loss goes below the candle here that crossed and broke the moving average. So you can see here price again, we made higher. This is the successful retest. We trended higher. We are not able to make a higher high at this point, and here even worse, price is going again back below the moving average. We have this long candle that is going against your trade. Let me extend the entry level. So you can see at that point, if you get out of this trade, it was a break-even trade. There is no way of knowing that price is going to turn around at this point. So if you stay in such a trade, it usually becomes a gamble, and cutting your position here for a break even or something below a break even for a very tiny loss is a good thing. You can see price would have shot up, although we have no way of knowing that here. It is usually best to just cut the trade and wait for such re-entry opportunity. You can see if we extend the line from this candle, then you could have gotten your re-entry opportunity, because at that point we are making, let me get that straight, we are making higher highs as well, and we have retested this area. So you could have gotten again your re-entry, and this is such a good example. And you can see throughout all the trades you usually get a re-entry opportunity. So I recommend be quick on the exit once you see the price is going against you. Usually there is no reason to get a full loss until price just spikes against you. Then there's nothing you can do. But if you see the price is slowly creeping against your trade, it's slowly going for your stop loss, then take the early exit, protect your position, reduce the risk, wait for the re-entry opportunity, which often comes, and then get into the trade at a later stage. Let's look at one more example. This is also a very classic one, and it is different from the one we have seen previously. So we are in this uptrend here, then we have this squeeze here. You can see previously after this top price has not broken the moving average, we moved back into it, then we crawled a little bit higher. We saw this fake out here at the top, very obvious. So that's our squeeze pattern, and then this squeeze pattern closes here at the bottom, which would have been the entry if you would have seen it. So let me mark that. I'll extend the line a little bit here so it sticks out. So the entry is after this candle with this fake out or trap, and then you can see that, let me mark the stop as well. As I said, the stop on such a squeeze can go halfway. It does not have to go all the way up here, although this is definitely safer if you think that you can get a good reward to risk ratio by placing the stop all the way here above the high. By all means go for that, but you can usually get the stop loss halfway in such a long candle, and then you can see what happens. Price goes in your favor, it goes against the trade direction again, but we don't break the moving average here. We retest it, we retest it here again, and we don't really break it. You can see that this is probably caused by the moving average getting dragged down by this long candle. So we did not break above the moving average at that point, and there is no need to get out of a trade. You can see we have two successful retests, and then price goes in your favor. So another classic example of the successful retest where price is not breaking the moving average. So in such a case, you just stay in a position. You can later on move your stop loss to protect the position, but there is no need to cut the position here once you see that price is going at the moving average and it's staying below the moving average. And maybe one more, because this is another classic example. So we have our 2 or 3 wave downtrend here first, second, and then this is our double bottom. You can see the very strong momentum shift here. The entry on such a candle is again at the close here. So this candle, the close of this long candle is the entry. The stop loss usually goes below the candle, although in such a case, if the candle is really that long, you don't have to go all the way down. But this takes some practice to see in your own trading. You will see that with experience that if you have such a huge candle, there's usually it's not necessary to go all the way at the bottom, but you can usually get in or get your stop loss in at a better price. Then what happens, you can see that after such a long candle, you would expect to see a follow through on the momentum, because we are looking for a long reversal, and this long candle is obviously showing us that we can expect more buying. But what happens, we see 1, 2, 3, 4, 5, 6, 7, 8 candles where price just goes sideways, and 8 candles on the 4-hour chart are 32 hours. So it is a very long waiting time, and you can see here price slowly drifts back against the moving average. So if you cut your trade at any point here, it is usually not a bad thing to do. If you don't want to cut your whole position, you still think it is not invalidating your idea, get at least out half of the position, so close 50% of your trade here, and then wait for the re-entry opportunity, which would have come here, either once we break above the highs here with this one, or the later one, which is here. So again, you can see, protect your position here when you see price is going against you. If you see that price is not following through on such a strong candle, then there's something wrong with the price action. Not all the time you will see an upside reversal. Sometimes price will just keep grinding against you. So take what you can and protect the position, and then again wait for the re-entry opportunity. Usually they come, and here, once you have cut your position here by 50%, you can get back in here very comfortably and then add back to the trade to get your full risk and your full size back on. So I think that should clarify a few things about how to manage a trade once you're in them, what to look for when you are in a trade and once price goes against you. And if you have any questions,